Okay, folks, welcome to not Sunday, but Monday Night Futures Live, the Dr. Martin Luther King special edition. So, what we're going to talk about tonight are I got to not forget to not share my screen. Number one, let's do that now. What we're going to talk about tonight are economic data that was released last week, economic data coming out this week. We're going to talk earnings, folks. Big week. Earnings has begun. Our earnings season trades have already taken place, and we started off pretty good. We're going to do a walkthrough. One of those trades that we're looking to put on UNH, I'll walk you through it. I did a video over the weekend. It's posted on YouTube. The Blackstone trade, we did very well there. That was an earnings trade. I also went over our trade of Zoom. We only made $100 and was the least profitable trade of the week. However, my favorite trade, and I'll tell you why in that video. It's posted on YouTube. If you're not familiar with Strangles, our favorite option strategy, the Strangle, there's a video listed below in the video description area. So if you hear me talking about selling premiums, selling options, Strangles, go to that explainer video, read it at your leisure. And what else are we going to talk about? Gold. People are starting to finally pay attention. We're going to talk about Bitcoin, what it's doing. So let's get started. We got a lot to go through. Folks, we can't forget about our sponsor. Our sponsor is our friends over at TrendSpider, Automated Technical Analysis. We will be using their software later on when we do members stock chart requests. I do have a bunch of requests to get to already. Joe, Square, STNE as well. And if we have time, we'll take some requests from the audience. We'll be using their automated trend lines, trade alerts, seasonality from TrendSpider. 35% discount code below. Use the link. Get TrendSpider. Get that extra arrow in your quiver. Trust me, your competition is using it. And I'm not talking about Goldman Sachs. They've had it. The guy next door to you has it now, the retail trader. Let's go to comments. Wow, look at all the comments. Franklin, yes, it was nice having the extra day off. Welcome. Eric, top of the evening to you. Larry, thank you for Saturday's week ahead commentary. Bob, it was very educated for it. Yeah, I went over it. It was long. I know it was long, but I thought it was time well spent. So I'm glad you got value out of it. I was worried that I had gone a little bit too long, but I'm glad you got value out of it. Abel, how are you, sir? Happy MLK Day. A great man, and certainly worthy of a national holiday. Paul M. Hi, Bob. Happy Monday. Happy Monday to you, sir. Thumbs up. TrendSpider the bomb. Awesome. Joseph Gardner, the man. Jeff, who I dedicated the Blackstone video. Actually, the Blackstone video too. Is TrendSpider one-time buy? No, it's yearly and annual subscriptions. I'm sorry, yearly and monthly subscriptions. And I give it away free with our silver and gold level memberships. Talon, hey Bob, can we go over the historical S&P data for the week? Sure, we could do that. You're talking about seasonality, right? Okay. Kind of on that seasonality note of the S&P 500. Let's bring it up before I forget, because if I don't do it now, I'm going to forget. Let's talk about seasonality as we proceed into the new trading week. And then I want to talk to you about a gamma event potential for the week, or a volatility squeeze on the week. And that was published by here, Zero Hedge. I just had a brain fart. I'll share that with you in a moment, why we make it get some volatility. Let's do SPY. We'll go back 11 years. That's good enough. This is has a bias of being up 64% of the time. Am I reading? Yeah, 64% of the times. So let me just clear this off here. I don't know if that skews it at all. For whatever reason, that pre-populates 64% of the times. Okay. That's done. Okay. Why might we get volatility one way or the other this week? We have $125 billion worth of deep in the money options set to expire this week. I love how they get this data together. I'll share this with you. Read it at your leisure. Doesn't mean a bias to the upside, to the downside. We're not quite sure. I don't know how much we put into this, but $125 billion is a heck of a lot of money. So read that at your leisure. I think that the larger influence on the market this week is going to be earnings. You have a lot of big names coming out this week, and it's just going to get hotter and hotter as we proceed into February. Economic data that was released last week was not good. Core CPI data, very hot. That's ex food and energy. CPI year over year. This is their manipulated number. Is 7%. If you use the number, the formula, the way they calculated inflation using the CPI back in the late 1970s, early 1980s, inflation would be between 13 and 15% right now. This is an underestimation of inflation. They use hedonic adjustments. They use owner's equivalent rent to underestimate, to understate rentals, the cost of housing. So don't let them take parking space up in your head. This is not an honest number. It's much higher. Initial jobless claims came out hotter. Producer price index seems to have moderated a bit. It came in with a miss. Retail sales, a horrible number on Friday. And that's probably one of the reasons why you saw a reversal in the market. And I think that reversal was probably a short covering rally ahead of a 3-day weekend. I'm a bit suspect of it. In fact, one of our fellow members, I did a coaching session with today, and it's Casper. I'm not sure if he's on. He's over in Holland, and he's short of Tesla. And we brought up the chart of Tesla, brought up the chart of the S&P 500. And to me, I'm just getting the feeling that what we saw was a short covering rally. Why in particular am I a bit speculative or skeptical of the rally in Tesla on Friday? Well, they're probably going to postpone the, what's that truck? The Cybertruck, whatever, until 2023. It's not going to come out in 2022. They just got done with the engineering in September of last year, so of September of 2021. They're not going to be in the manufacturing stage probably until 2023. So a big delay there where you have Ford now. Ford shares are ripping with the sale of their EV truck, the F-150, the world's most popular vehicle or pickup truck anyway. So they're already in production. They're doing quite well. Whereas Tesla, they got problems. We were talking about that at great length today. Lewis, how are you, sir? Top of the evening to you. Happy MLK Day. Okay, so let's move on to economic data that's coming out this week. I'm not going to put much stock, pardon the pun, into earnings coming out this week. Excuse me, not earnings, economic data, because earnings are going to be front and center. It's silly season. So they're going to keep this market propped up as best as possible. Some housing numbers coming out on Wednesday, tomorrow, Empire State Manufacturing Index. Thursday, we always get the initial jobless claims. We're going to get the Philly Fed numbers on Thursday. And Friday, the Fed's leading economic indicators. So not a ton of data coming out this week. And again, it's going to be all about earnings. Two earnings. What's coming out? A hodgepodge of earnings out of, where are my earnings reports? Here we go. Out of sequence. How dare you? Where's my producer? So we plan on trading UNH, United Healthcare. They report pre-market on Wednesday. I'll show you the parameters that we're using on that setup. What we don't trade here, we have a list of about 41 companies that we plan on trading earnings on this earnings season. It'll probably end up being about that number. I'm going to take some off. I'm going to put some on. But what we won't trade are a few sectors. One, ride shares in insurance companies. Why? Perceived conflict of interest. I avoid that at all costs. So no ride sharers, no insurance companies whatsoever. Two, I don't trade earnings trades of, I don't care what pharmaceutical company it is. I just don't do it because the earnings reports are binary events, meaning potentially 2 standard deviation type moves on these announcements. I don't need a 3 standard deviation move because with an earnings report, they're going to come out and say their phase 3 trials of their number 1 performing expected drug for the coming fiscal year is not going to pass muster. I don't need that headache. So they may be okay premiums, but you know what? It's not worth the headache. There are plenty of other trades out there for us to put on. So I do not trade pharma. I do not trade biotech names into earnings. What else don't we trade? Anything that's low beta. If there's no money to be made on the options, you have to take too much risk, and you're not going to get paid enough reward to get away from the strike prices. Then we're going to get involved for. So we avoid many stocks. So simply because they're on this calendar, I did not create this calendar, but we will be trading UNH, Netflix definitely this week. Intuitive Surgical, I've traded to trade before. I can never get the order off. I can't get it. I can't get a fill. So I'll try it. Maybe because it's earnings, I'll get the fill. But I'm not dying to get involved with ISRG. Netflix is plenty for me. And we'll talk about next week on Sunday night, next Sunday night. Okay, and we'll talk about how we did with our trades for the past week. What else do we plan on doing this week? I plan on putting on a credit spread for Tesla expiring on Friday. Why do I want to do that? The reason is that as you proceed into earnings, the options get more and more expensive. Speculators are moving in. They're speculating that you're going to get one move or the other in a very big way. What are we going to do? We're going to take advantage of that. So we're going to sell deep out of the money, call options with a hedge on that trade. It will not be a naked call. We will probably sell, like we did last week, the 1175 call. And then on top of that, we'll sell the 1195 or the 1200 call to act as an insurance policy. And that way it doesn't eat away at our buying power as well. So we're able to do other things. So also, we have Nugget. Nugget is a big position of ours. I plan on selling covered calls. So we're looking at cash flow this coming week, and this is going to be every week. Cash flow through selling covered calls, Nugget, possibly on our silver trade as well. But you have to go out 30 days for that trade. They only have monthly options for AGQ. We plan on doing earnings trades and, of course, the Tesla. So 3 different ways of generating cash flow this coming week. Actually 4, because we have theta decay trades, meaning time decay trades, and they're really going to be evaporating. That's on NVIDIA and on Salesforce.com. NVIDIA's options expire on February the 11th, and Salesforce.com, those options expire the following week, and we're doing quite well with those trades. So good stuff. Very busy. It's going to be a busy earnings season. And let's move on here I'll go to UNH at the end. So if you're bored with and you don't want to go over the options setups, fine. I'll wait to the end and do that for those that are interested. But what I want to talk about before we move on to the futures action, I want to talk about gold. This is a tweet. I'm assuming that it's accurate. According to the data from the Reserve Bank of India, it bought 3.7 tons of gold in December. That's a huge buy. Net gold purchases for 2021 as a whole totaled 77.5 tons, the highest total since 2009. India is stocking up. Add to that, besides China and Russia, big buyers of gold. Now you're starting to see the Twitter sphere begin to pick up on what we've been talking about for over a month now, that gold is breaking out. They're picking up on it on a daily time frame, which is fine. We picked up on it on a monthly time frame. Sorry, folks. So this is a good chart. I wanted to share it. I think he did a nice job of identifying the base, then the breakout. Note how after we broke out, we're doing a dance on top of what was resistance. What he has here in blue is now support. This is going to be, tomorrow is going to be day 5 above this breakout point. It's got to make a move very soon. I think it's going to get resolved to the upside. Why? It's because that's where the trend is going, folks. This is the monthly chart of gold. I have 2 that I'll share with you. This is one where we haven't seen the breakout on the line chart, but it's a different view from my other chart that I have, which is this one here, which is very similar to the daily chart I just showed you here, in that we have a major cup, downward sloping handle. Kind of, it's not a gentle sloping handle, which is supposed to be, but it's a downward sloping handle. You can construe it as such. What do you have here? Cup. This is a nice downward sloping handle. We broke out last month. This month we did a retest of the breakout point, and now it appears that we are ready to proceed higher. And I think he is right here in that he's got, I don't know this guy, but needs to get above 1833 to 1837. That opens it up to 1880. That's very reasonable. I think I agree with that opinion. So good tweet here. And this chart, he did a nice job of annotating and analyzing. I'm in agreement. I think gold is heading up higher. With that, I want to take a look at the futures action, primarily first of the US dollar. Now, the dollar had a very rough week last week, but it did rally on Friday. Look at the breakdown here on a 4-hour chart. This chart goes all the way back to where did this begin? Early November, this consolidation, and it got resolved to the downside. For those folks who are not familiar, why am I talking about the dollar in the context of gold? Well, gold is priced in US dollars. If the dollar is rolling over and breaking down, well, that's good for gold. Now, there are going to be many people out there that are of the opinion that because the Federal Reserve is anticipated to raise rates, that is going to be a negative for gold. That is inaccurate. It's totally inaccurate. And I'm going to point out a time in the past. We'll come back to this. A time in the past, and it goes back here. December of 2015. That was Q4 of 2015. And why that month and that quarter was significant was because it was the first time in, it was either 9 or 10 years, that the Federal Reserve raised rates by a 0.25 percentage point, and they didn't do so for another year. So what happened initially with gold? Well, the knee-jerk reaction, which is usually the wrong reaction, was they took it down. What happened though, as you moved into 2016, it broke out and it went into the bull market that we are now beginning to see a continuation breakout above. So why would gold rally with yields that are going to rise to help defeat inflation? It's because it's not going to defeat inflation. Here's how unserious the Federal Reserve is about fighting inflation. There was a Sunday back in the late 1970s, early 1980s. Paul Volcker it was definitely 1980s because President Reagan was in office now. On a Sunday, he raised interest rates by a half point, or as the slickback Wall Streeters like to say on CNBC, 50 basis points, because they don't want to make it difficult. It's a half point increase. Thugs. So fast forward and you juxtapose the actions of Volcker, which relative to Powell is an absolute joke. We're still buying debt. So my analogy for this is that you have a house on fire. Powell's the fireman. The fire is inflation. He comes out not with a hose, but with gasoline, and he's putting it on the fire. That's what he's doing now. And he's hoping that inflation is transitory. He stopped saying transitory, but believe me, he's laying in bed every night going, I hope this is transitory. And I hope my jawboning of the bond market allows me to not have to raise rates aggressively. And even if he does, folks, remember the difference between now and 1980 is this. In 1980, we were a creditor nation. We are now a debtor nation. At that point in time, we had manufacturing. We have no longer have the manufacturing might that we did back then. Back then, we did not have to worry about the servicing of our debt. We could raise rates up to astronomical levels. Whereas today, we cannot do that. Why? It's because if they were ever to normalize the 10-year yield to say about 5%, 6%, the interest on our debt alone, forget about principal, the interest on our debt alone would be the equivalent of our defense budget. Think about it. That's $800 billion a year out the window going overseas. So Powell has not even yet begun to fight inflation. This is why gold is going to rip through the ceiling. JPM still holds the playbook on gold, silver. What do you think about DGP? Well, DGP. What's DGP? I'm going to throw a monkey wrench into that traditional argument about JP Morgan. Oh, double gold ETF. Okay. It's a leverage ETF. You know, if I like gold, I like this. It's going to just be careful. You have time decay here. It's a trading vehicle. It's not an investment vehicle. So I'm not sure if it's optionable. If it's optionable, I would be looking to sell. No, there are no options here that I know of. This is sometimes wrong. But if there were options available, I'd be looking to sell covered calls against the position and fight off that time decay. Anyway, to push back a little bit on JP Morgan, you have the Basel III agreement, and no longer is paper gold, which is how they manipulate gold and silver, that is no longer a tier 1 asset as it once was. It is now a tier 3 asset. So in short, it's not as high a quality of what's the word I'm looking for? It's a simple word. Asset that it once was. So it doesn't make a lot of sense for a lot of these companies or a lot of these banks to be holding paper gold. They'd rather own physical. If they start buying physical, what happens to the price of physical gold? And think about all the bear raids that you've seen on gold over the past several months. Hell, I've been live on our evening live streams when they have attacked gold. Look at these sell-offs. It's been bananas. But all in all, despite all of these bear raids, we've been stuck in a trading range for a year on gold. So I'm not too worried about this JPM manipulation. I think that's a story that's going to fade away. My own personal opinion. I could be wrong. Talent gold futures. Here we come. What are they doing? Speaking of gold futures, what are they doing? They were up all day. Where are we at here? Wrong click. Yeah, they're flat. They're flat. Okay. 1865. I think what you mean is that if we go through 1865, we go to 2000 in a heartbeat. Yeah, I would agree with that. Yeah. TZ Canadian, welcome. Hello, my first stream. Welcome. Thanks for being here. Smash the like button. Subscribe to the channel. RB, Apple, please. Got it, pal. Who else do we have? Do you think that Amazon is a trading range that could go up? You know, Amazon's, I haven't looked at it in a while. It's certainly on our earnings trade list. I know it had pulled back on the monthly chart. Amazon a couple of weeks ago looked very, very good. We'll check it out. We'll check it out. I don't want to go off the top of my head because I haven't looked at it in the past week. Easy. Okay, let's go take a look at what the equity markets are doing. NASDAQ down about a 0.25 percentage point. S&Ps flat. Was the Russell 2000? Up slightly. We got a resistance up here on the Russell. But I'll tell you, the Russell's been resilient. It's taking it on the chin, but it hasn't broken support. Let's take a look at some commodities, natural gas. Let's take a look at a weekly view of nat gas. This is this week. We're down in the week so far. Stokes are hooking up. Oil, I think, is going a lot higher. Natural gas, too. Oil's going higher. This is a monster. It's already up a 0.5 percentage point. We're going higher. We're going $100 a barrel. Easy. Let's see what home heating oil is doing. I got to call them for a delivery. I just got one. All right. I don't want to keep people waiting here. I can never find this goddamn symbol. Is it HG? Oh, that's copper. Copper looking awesome. Copper's going to rip. Look at the tight Bollinger Bands. We're trading on top of the 20-period moving average on a weekly time frame. Copper's a buy. Very attractive chart. What's it doing? 4-hour time frame. It's pulled back, consolidating nicely. I think copper's a buy. As a contrarian, I like to trade beyond. Oh, you are a contrarian. That's one of those names where I wouldn't trade earnings on it. You know what? Let me rephrase. I would hedge the earnings trade on Beyond Meat. I mean, normally I sell Strangles, but I'd have to open up I put on hedges, wings on top of that trade as protection. What do you think of XOM or OXY? We'll take a look at them, but XOM is certainly on our list of stocks we plan on trading earnings. OXY, not so much. Doesn't mean I won't. I just know XOM, that's all. We'll take a look at Beyond Meat. Now you got me thinking about it. RB Apple, we already have that. Okay. All right. So those are the futures. Let's talk a bit about where we began, and that was with earnings. So UNH reports on Wednesday. So here are, this is a probability calculator. And the first thing I want to start off with is that you should never, ever, ever, ever trust a probability calculator into a binary event. What's a binary event? It's a potential 2 standard, 3 standard deviation move. This does not take into calculation, this does not take into consideration a 2 or 3 standard deviation move on any one particular date. This is an average over the course of a year of the implied volatility. So, that being said, this is for illustrative purposes only that I'm using this probability calculator. Just because it says 0% probability on a 30-day to an 80-day high implied volatility, ignore it. Don't use it, please. I beg of you. You will go broke. Okay, that being said, I'm looking to sell using the closing price. This is subject to change because the price is going to change and the anticipated market maker move is going to change slightly. This is a fairly, and I said this is running contrary to what I said earlier about insurance companies. I do not trade property damage insurance companies, to be more specific. So UNH we do trade. So we're going to be looking to sell the 500 strike to the call side and the 435 strike to the put side. So you can see we close at just shy of 469 per share. That's a pretty good distance away from where the shares close, where our strikes are. And we like that. We don't want our put side to get challenged. We don't want our call side to get challenged. We just want the shares to do absolutely nothing. We're not call or put option buyers and hoping for a big move. We are sellers taking advantage of expensive options into an event. So why do I feel comfortable with these strikes? Well, unlike a lot of traders out there, John Carter is one that does use technical analysis. Many other options traders out there do not use technical analysis. I do. So when you take a look at UNH, what I want to know is where is my resistance level and where is my support level? Because I want my strikes to be above resistance yet below support. So that way I have buyers and sellers of like mind at these support and resistance levels, helping me defend my call and my strike, my call and my put side strike. That way I have a greater probability of profit. In short, we're using technical analysis to help improve our odds of profitability. Add to that, we're using the anticipated market maker move, plus I add on a buffer on top of that because they're not always right. So that's how we arrived at our strikes for UNH. and we'll be looking to generate 435. This is not going to be the real credit here. This will probably be about 75 cents on the put side, and on the call side, probably about 65 cents on the call side, and our delta, meaning uh, the move of the option relative to every dollar's worth of uh, move on the share price is very, very low. And that's what we want. We want to take advantage of the high implied volatility and this theta, time decay. So that's the trade. We're sticking to it. It's subject to change with market fluctuations, but that's what we're looking at in the very short term. Thank you, Falcon. Z. What is that? Zillow? Oh, look at this guy. He's my spammer of the week. You guys got nothing better to do? Block. Okay. All right. Let's do some chart requests. You had a typo? Or are you talking about that other guy that I blocked? That other guy's not a typo. It's just a spammer. I think it's a robot. It's not even a person. Okay, let's talk about Joe. This is the coffee ETF. I'm loving the Stokes, loving RSI. Able ASML. Okay. We're going to leave it off at ASML because I have a bunch to go over. Able was the last one. Weekly chart looks really, really good here on Joe. We're breaking out. We have broken out. We are breaking out. We have broken out. Continuation move last week. Stokes are rising. There's not much. There's only 4 years worth of data on seasonality, so we're going to skip that. Daily chart. Now, using the automated trend lines, I'm going to take them off, throw them back on. Here's your resistance above. And this is for real. It got stopped here, and it got stopped here. What I would do on Joe is set an alert. Again, folks, if you're not using TrendSpider, 35% discount code below. Set up an alert, and this will tell you when to get out if you want to swing trade. If it's an investment, ignore this. But if it's a swing trade, set up your alert and let the computer tell you when to get out. Because this is rising, and as the days go on and we don't hit it, it's going to continue to move up higher. And we'll keep this active just for, I don't own any, so I'm not going to keep it active for long. We want to get notified as soon as possible. And there you have it. Alert is set. So Joe, bullish. SQ, what do they call this now? Block? Block. Dorsey with his blockhead. All right. Block looks like hell. It's broken support. We have a continuation breakdown. I'm looking for support here at 125.58. Let's validate that on a monthly chart. Yeah. 125 in that range. In fact, I'm interested in the shares. Let's use the weekly chart. I'm interested in the shares at that price point. But remember, earnings are coming up soon. What I would like to do here, given that its earnings are coming up, uh, sell deep out of the money naked puts off a support level. And selling those naked puts off of a support level gives you an extra added probability of profit. I like the Stokes. They're really double bottoming out here on a weekly time frame. So I think a lot of the damage has been done here. We're nearing the end of the sell-off. It's probably going to begin to bottom out. Daily chart. We did break a support level on Friday. Again, the value of the automated trend lines. Stokes are rolling over again. I would wait for that support level to get hit on a weekly time frame. What did I say? 125 and change. And our alert set. We're good to go here. Here's the alert for Square. Here's the alert for Joe. Next chart up. Oh, let's do Square. Well, Square doesn't have much history either. 6 years worth of data. Forget it. STNE. I know I've gone over this one before. Let's go to a monthly chart. I remember this one. I don't like the monthly chart. I just don't like it. They're trying to rally just as they did last month. You know, you can look at the Stokes and say they're oversold, but they could remain oversold. Weekly chart. You know, on a spec, if you wanted to buy it, that's fine, but you got to use a very tight stop. Should we close down below 1437? And if the trade works out, if you open up a position now and it works out and you close above this resistance level here at, let's call it 1775, then you could add more. I would leg into the position. Daily chart. So we broke out on the 12th. Now we're pulling back and doing a retest of multiple support levels. One of them is an automated trend line in blue. Take them off, put them back on. We're now in a triangle formation. The other is my manually drawn support level. Stokes are rolling over. You want to see them hook up. They remain down below 50. You got to see these hook up. So remember, if you're going to nibble now, fine. Tight stop. Add more on a breakout. Apple. Apple reports earnings soon. It rallied back last week, but it closed well off the highs of the week. So you're still seeing some selling in there, despite the fact that it managed to close up and it held support. Daily chart. I think it's a speculative buy. If you wanted to buy it, I'd have no problem with that buy. But if we close down below Friday's lows, if you want to keep it looser down below the lows of January the 10th, I'd be out. Stop out. Add more on strength. Amazon. Now, if memory serves me, it was a monthly chart of Amazon. I mean, this is a beautiful, beautiful consolidation, which began back in August of 2020. So here were your post-COVID gains, and now all we're doing is digesting those gains. So, while we were down last month, we're down this month, all we're doing is we're flirting with the lower band of a very long-term trading range on Amazon at around $3,100 a share. So this is one where if you have the margin buying power of selling a $3,100 put, that's one way to trade Amazon. The other, you'd have to drill down in time frame to see if there's a setup here. I don't love the weekly chart. We did reverse off the lows of the week, a bit of a spinning top formation. Stokes is still declining. I think we're nearing the end of this sell-off, but the bias is probably going to remain somewhat to the downside, is my guess. It's becoming tougher now because a lot of technical damage has been done here. The daily chart looks pretty good. The daily chart, we're in a wedge formation or a triangle formation. Call it cupcakes. I don't care. All it is this. Watch. Take the trend lines off. Put them back on. Here are your buyers. Here are your sellers. I think this could be bought. Use a tight stop below. I would use Friday's lows or this support level here. Create an alert. If it breaks down below that support level, I would be out. That support level is at 31.77, and I would add more on a close above 32.80 per share. That's Amazon. XOM. Short look at Tesla. This is Casper, who I was mentioning earlier. Tesla's short. We'll take a look at it for you. ASML is a smart one. Saying it as a Dutch guy, it's prior to the Dutch market. Madman. Okay, Cliff. All right. Have you reviewed your last year's profits on Swing Trader? What are your profits, stop loss ratio, win rates? Yeah, I can't go over all that right now. I got to break it out into equities and into options. It's pretty detailed, and my accountant's still working on some of it. His name's Seamless Joe. Are you talking about the spammer? Yeah. Every week they're getting me now. Now I even have copycat accounts on my Instagram. I never solicit you for money on Instagram or pretty much anything. I don't engage people like in stupid conversations. So if you get a DM from an account that looks just like mine, it's probably a fake one. XOM. XOM looks so good here. This is a daily chart, but man, it looks really good. Yeah, this is not. Sorry, pal. It's just not the environment I can go into that right now. but our options trading really we killed it the back half of the year. The one trade that I saw a drawdown in last year was our short of the IWM. I stuck with that trade a little bit too long, and in hindsight, I should have stuck with it because now we wouldn't be in the money, but it certainly we would have regained a lot of those losses back. But despite having stopped out of that position, I mean, the second half of the year, I mean, we just absolutely killed it with option selling. I mean, it was bananas. So we switched up our strategy in April and killed it. Just killed it. All right, so XOM. We're going to be trading earnings on XOM. I love the chart. Weekly chart, rock solid. Stokes rising, RSI rising, daily chart. There's nothing not to like here. Consolidating after breaking out. Here are your automated trend lines. If you had an alert set, you would already be in. ExxonMobil moving up higher. Love it. It pays a dividend, a nice dividend. OXY. Occidental Petroleum. Looking good here. The one problem with Occidental is that you're at resistance, right? There you go. So what was support back here is now going to act perhaps as a bit of resistance. It'll probably overcome it. You know, support and resistance levels were meant to be broken. So simply because you have a resistance level up there doesn't mean you avoid the trade. It just means you probably don't want to buy it right here, right now. You either want to wait A, for a pullback, or B, a breakout above the resistance level. Just don't buy it into resistance. Daily chart. We broke out on a daily time frame on OXY, looking good. I think it goes up higher from here. Stokes are very overbought. Very overbought. But man, this is a good looking chart. Look at the volume. This is institutional demand. This is not mom and pop buying 100 shares of Oxy. XOM. More institutional demand. You know, these are overbought. But longer term, they're going up higher. They're in fuego. All right, Beyond Meat. Have we stopped going down here? I think we have stopped going down on Beyond Meat. I got to check out when their earnings are. By chance, do you know when their earnings are? All right, so we broke monthly support back here in November, failed to recapture support in December, failed to recapture support thus far in January. Stokes flattening out. A lot of the technical damage has been done here. If we do break to new lower lows, we're coming down here to the lows of March of 2020. Not a good place to be. Weekly chart. Bearish reversal bar last week. Stokes are rising. This is the cause of the Stokes rising. You had a couple of up weeks there. Daily chart. It gave up support again on Friday. I want to say, yeah, it looks good, but it doesn't. I think it's going to break lower. Here's your dead cat bounce, an oversold bounce. I don't like it. Not yet. And I could be wrong here. I'll put it out there. I could be wrong. But man, when I see topping action, let's go to my saved chart of Beyond Meat. When I see topping action like that on a weekly chart, and this is why I always say use the weekly charts, get away from the daily or intraday charts, step back. Because this is a problem. This is a major problem, but I'm going to point out some good stuff here too. That's a problem. There are a lot of sellers up there. People who bought back here, who bought back here, who bought back here. They want their money back. I think if we break below 62, we could head down to the high 50s. But I wouldn't be surprised if we broke out. Why? Take note of your Stokes here. They gave a false flag breakout back here, but they're rising again. So momentum is beginning to change beneath the surface, and we're breaking out. MACD histogram. The momentum of selling has subsided considerably, but you still saw some institutional selling. I don't think it's time to buy it right now. I think you should wait for a breakout or a breakdown. If it breaks out, open a position. If it breaks down, you wait until the low 50s, high 40s. Beyond has a catalyst of Kentucky Fried Chicken approaching them in the supply chain nugget deal. Okay. You bought at 58. Tom Liu bought at 58. Good price. MCD's McPlant will be the killer for Beyond. Oh, they're doing their own now? All right. Let's move on. ASML. For our Dutch audience out there. This is not working. I think you're setting up for continuation breakout here. This is a monthly chart on ASML. I want to know if and when we do break out of that support level. Why won't you let me change this? Let's try it here. Okay. Something funky was there. All right. So here's our alert we're going to set up. Now, the thing to remember here is that growth is out of favor. You have a lot of money rotating out of growth and into value. They're going into energy. They're going into certain transports. So just be careful here. Wait for the breakout on ASML. I'm sure there's going to be counter trend rallies throughout the year. Yeah, this is a very valid point. Yeah, I think 35% of their shares is short. Correct me if I'm wrong on that. Fact check me. But I think that's accurate. Patrick, hello, sir. Good to see you. I got back. I like to get back. NVIDIA. Yeah, NVIDIA is setting up nicely. I like NVIDIA. We have an options position on NVIDIA, just so you're aware of that. Let's go to a daily chart, ASML. A little bit sloppy. Wait for the breakout. Our alert set, Stokes rising, RSI hooking up. I think the odds favor bulls on ASML. Cliff, Cleveland Cliffs, broke support last week, avoid. I'm not sure what's going on here. This should be doing well, and it's not. Bearish reversal bar. They tried to break it out on the month. They failed. It was rejected. Something happened here. Broke support on a weekly time frame, daily time frame. Avoid right now. Let's see if it can come back by the end of the month. Zillow Group. This company's, they made some bad mistakes here. We have a potential for an outside reversal bar on a monthly time frame. Very, very bearish. This could be a dead cat bounce on Zillow or a bull flag setup. Again, call it cupcakes. It doesn't matter. It's just not bullish. Weekly chart. I would avoid it. Stokes are rolling over. This is not what you want to see. And I would not be long of this stock into earnings. They really screwed the pooch on their real estate deals. So I would avoid Zillow right now. The daily chart looks okay for potential swing trade. If you're going to buy this, use a tight stop below Friday's lows. Add more on a breakout above, let's call it $58 a share. Franklin, have a great evening, my friend. Thanks for being here. Thank you, Greg. Great to have you. Yeah, still have the strangle on NVIDIA. Now we're profitable on that trade because we rolled down the call side strikes twice. My P&L spreadsheet for the existing trade still shows it as a loser trade, but in reality it's not because we rolled down the call side strikes twice. So we're technically up on the trade. And the time decay is like 27 cents a day now. So, if it just stays sideways, I'm happy. I put in GGB requests. It did. Why didn't I see it? Yep, it's there. GGB. Looks good. It's going up higher. It broke out last week. Watch for potential retest of this breakout point this week. That's where I'll be looking to add or open to my position. And we'll keep a little bit of resistance. Yeah. And we'll keep it active for a couple of weeks. We're good to go. I like it. It's going up higher. Daily chart. Yeah, I like it. Bullish. Oh, we have seasonality here. Not a great week. Going back 11 years, up only 48% of the times. Monthly time frame. January is not a favorable month. So how do you use seasonality in your trading decisions? Take it with a grain of salt. You may want to think about being more deliberate with your position sizing. Maybe not be as big as you normally would, be Were you going into the month of July or the month of October or the month of December? Maybe you want to stay a little bit smaller. What are Tesla futures doing? I don't have Tesla futures. I don't have that. Let's take a look at Tesla. A lot of resistance up here on Tesla. And what I was discussing with Casper earlier today was that if Tesla slips back down below $1,000 a share, I don't think it's going to recover. I'm going to restart this trade alert, which expired. It becomes a short on a close down below that level. We'll leave it off with SoFi for Pat. How to avoid it, Pat. Broke weekly support last week on volume. They tried to rally it. It was rejected. You are seeing your stochastics begin to bottom out here. Let's take a quick peek at a monthly chart. You don't have a lot of historical support below here, but it can go lower. I would avoid this. Not a bad day on Friday, but there were a lot of shorts getting squeezed on Friday. Stokes are looking good, possible W formation. So you may get a pop here. The question is, how long does it last? So I would just be careful. Possible short-term swing trade. And with that, folks, everybody have a great trading day and a great trading week. Thanks for being here. Smash the like button, subscribe to the channel, and I will talk to you throughout the week. Be well.